Hi guys, Trader Michael here, and today we will be discussing the Heiken Ashi strategy based on Heiken Ashi candles. So yeah, let's dive in straight to the Euro USD currency pair chart. And the Heiken Ashi candles are basically an indicator that smooths out the traditional Japanese candlesticks, and they are placed and they are basically replacing the Japanese candlesticks on the chart in this web terminal. So where you put them on the chart is clicking on this tab where you choose the type of the price chart display. You choose Heiken Ashi, and yep, they are replaced. They replaced the Japanese candlesticks. And the formula for formatting the Heiken Ashi candle goes as follows. The opening price, maybe let's choose a more informative candle. Let's choose this one. So the opening price is always somewhere in the middle of the previous candle, because the equation for the opening price is the opening price of the previous candle, closing price of the previous candle divided by 2. So as you can probably deduct from this math equation, it will be in the middle. So the highest point is the highest point, the lowest point is the lowest point basically, and the closing price is most simple way I can say it is the average price which was during that time. Because the equation goes as follows: it is the opening price plus closing price plus highest point plus lowest point divided by 4, which is basically the average price of this whole formation. Okay guys, but before I will jump into the trading with this strategy to check the results, I need to also show you how it works on the MetaTrader 4 platform, because you can also add it as an indicator on the chart in the MetaTrader 4. So let's open for example this Euro Pound chart, and we go to the button Insert. Let's go for the indicators, then Custom, and here we have Heiken Ashi. Click on that. Doesn't matter. Right here we have the color of the candlesticks. So let's click OK. And as you can see, it is not very informative, guys. So what we need to do in order to make it a little bit more visible. First one, we need to change the Japanese candlesticks on the chart to the line chart. That's the first one. Let's zoom in a bit. Right here is more informative, but additional thing that we need to do, right click, properties, and the white color we need to change, for example, for the green color, right? Let's make it more visible. Not this one, lime. No, which one? Yes, lime. Okay, and right here you have the Heiken Ashi candlesticks, but due to this visual preferences of the MetaTrader 4, it doesn't look that good. I think we can all agree that it doesn't look very informative, it doesn't look very clear to analyze the charts. So I recommend for in sake of the good analysis to use the web terminal on the LiteForex on the LiteForex page. Okay guys, there are basically two strategies described in the article. The first one is the scalping strategy with a combination of the chart patterns with the candlestick patterns. And the other is the combination of the Heiken Ashi with the Ichimoku indicator. But the first one is the scalping strategy, as I told before, and the other one is for mid-term trades, since it is on the higher time frame from H4 to like D1 and higher. So let's start from the scalping strategy, and I already found an example of the combination of the triangle pattern and the, as you can see, couple dojis and a high wave candlesticks. So as you can see right here, we have this beautiful triangle. We have a breakout. We have the signal from the candlesticks that we have the doji, a high wave, red, green candlesticks, candlestick right here, again a green candlestick, and a breakout. So we could probably enter over here and close our transaction somewhere over here, since we have the reversal, doji, and that would be a signal for us to exit the trade. So from this particular trade we could take around, guys, 50 pips. So I guess that's a very good profit from a single trade. Let's check the risk. That stop loss should be below the lowest point, recent lowest point. So for us in this particular example would be right here, which is 25 pips. So the risk ratio is 2 to 1, which is still very good, right? So yeah, let's check an example for a sell trade right now. Okay guys, and now we have the example for a short trade, and we have this wedge formation right here. Let me show it to you. Okay, and here we have the red candle, the high wave, breakout, and the move downward to the level of 1.2216. So I think we could exit around the second green candle, which should scare us, and yeah, let us close the trade with this kind of profit on the level of 1.2235. Okay, so now let's move on to the second strategy combined with the Ichimoku, and to check it we need to go for the H4 time frame. Okay, maybe let's delete all figures. H4 time frame and add the Ichimoku indicator. So again, click in the indicators tab and look for the Ichimoku, which is right here. Click on that and it is automatically added to our price chart. But let's change the style of the lines, so be red. Okay, so basically let's look for oh, okay, here we have very good example for a long trade. So guys, the rules are as follows. The chart needs to be out of the Kumo cloud, and the Tenkan line needs to be above the Kijun line. Also, the Chiku line needs to be above the price chart, and it needs to be in the uptrend. So I can mark it like here with this line. We have the clear uptrend, we have the doji candlestick, and here we have the green candle, which signals us the entry level, because all the conditions are met, so we could enter a trade. Of course, stop loss below the recent lowest point, and the exit level would be when the Tenkan line crosses the Kijun line from the top to the bottom side. So yeah guys, I will take this strategy for a spin for a couple days and to show you the results in a second. So guys, after a week of testing this strategy, trading with 0.2 lot per trade, I got around 160 euros. And I must say that this is not a strategy I would use on a daily basis, since it is very laggy. If you don't have much experience, you would be very often caught between two signals in both directions. So for the start, better not to trade it with real money on smaller time frames trying to do scalping. But that doesn't mean it doesn't work. It does, but it feels like the signal should be given a little bit faster. What I do recommend is to use this strategy combined with the Ichimoku indicator. As far as I backtested, it has almost a perfect win ratio. But there is of course a catch, that it works best on the H4 time frame, so there will be not many signals. If still you want to try it for scalping, I recommend using the European session and beginning of the US session, as I said previously. During the Asian session there is a lower volatility on the market, and you'll quickly notice that there are many signals, one after another, in every direction. So that is all. That is basically my take on this strategy. Let me know if you has used it already, and yeah, let me know your thoughts. Take care and goodbye, guys.